Hey y'all, how's it going? So I'm trading the ES futures on a 2000 tick chart with a 21 EMA. We have the overnight highs here, overnight lows here. We're in this range. Those are our key levels. So basically, it starts out, we have this downtrend here, break, a couple attempts at a new low. As soon as we reach the measured move, it goes congestive. It gets, it starts turning into this range here below the main range. And so we can look for fades. I would like to see it rush above the EMA and hold to go long. You can go short if price just continues to decline the range. We don't get any good shorts though because we don't really start really trending down. We kind of just push off we retest it here, and there's no good short entry because it's just a rush above, and then the signal bar is terrible. It's just rejecting the EMA to the downside. Basically, it looks terrible to go short there. But it does go down there. It is the start of these two legs down here. These two smaller legs down are clearly related to each other. So basically, the closest entry in this whole area right here is this, but I don't necessarily think it's that great because, well, look, it's very bearish. And then this range, I just wish it was more balanced out in order to go long, to fade it. So, because you're looking to fade this overnight range here, you can look to fade this range, but the EMA straight down, price is clearly kind of holding off of it. It's not perfect because it does close back above here, but it's holding off of it, going down, and then as soon as it does close back above the EMA, it traps, ticks higher, and then just traps lower. So that's just the sign of bearish momentum. And so when we get this signal bar down here, that's right after this bearish trap that just happened, so I was not looking to enter on that. The closest thing that you'd possibly be able to take is this, but I would want stuff above the EMA at this point because it's just proven that it's bearish. So even though you have a better signal bar there and it's kind of separated a little bit more from this bearish move, I still would want to see it hold above the EMA just because of how bearish it was. And so I didn't think it was a perfect entry. And also this range, it wasn't just chopping straight back and forth through the EMA, because when it does that, I don't mind it. But this one was more holding to the low side, which made me not want to enter directly into it. So just thought I'd mention that. We push higher here. So the downtrend played out with these two legs to a new low, so we know that we can get a reversal. Now on a big picture, we do have this one leg down. We can expect that on a bigger picture as well. That doesn't mean we can't go long because it is very big picture. There's going to be a lot of price action in between, most likely. And so we push higher here. So at this point, this uptrend is in play. This uptrend has a break. You can expect prices to make a new high. It has an attempt right there, but then it just plummets lower. And so I have this right here marked as a trap that I'm sure some people would take as a big picture failed second entry. They would say first entry short, second entry short, failure. Now the things that are wrong with this is, now like I said, you can look for longs even though this bearish measured move is in play. We can expect possible second leg down. That is true. But on this entry, price has not been holding above the EMA or the overnight lows at all. So it's basically just been forming a bearish imbalance. And so you can still look for longs, but when you have an overall bearish imbalance, bearish general context, and then once you get down to the exact entry, price rushes below the EMA. If the EMA, or if you're overall bearish and then on your entry it can't even hold the EMA, then there's no way. And so it's just not very good context, and then the setup is not good either. The setup is not confluent with the context. The setup is too bearish for how bearish the context is. If the setup was more bullish, I would have thought it's fine, because you are expecting to reach this measured move, and you're likely to reach a short-term measured move. And then when you reach the short-term measured move, that's often the point that it launches the big one, which actually happens here. It doesn't quite reach it, but once it gets kind of near it, that's when it launches the bigger measured move here. So, and that happens all over the place. If you go through your charts, if you draw measured moves, very often the bigger measured moves will stem from smaller measured moves being met exactly, or from two attempts. It didn't quite reach it here, but it was a uptrend break. First attempt, second attempt, failure. So just keep that in mind. It's good to draw the measured moves, even if it feels unnecessary sometimes. It's good to just draw them all over the place. So I kind of have this one more marked out right here. This is a failed second entry, which I missed because I had just gotten out of this, which this trade isn't nearly as good. I wish I would have rather have had this trade on my record than this one. So anyway, first entry long, second entry long, failure. That's kind of the concept with this trade as well. This one's more short term. But anyway, I feel like I might have skipped over some stuff in here. I kind of skipped over that. So let me stay right here. Oh, whoops. All right. So that's why I don't like going long there. It's just too bearish. You can look for longs, but the setup is not good given how bearish it is, and then it rushed below the EMA. Anyway, let's move on. Here we have another push higher here, even though you have this push up and then this break and then the second push up on a big picture. That's going to just be one attempt because it's just so small, and they're so close to each other. And so then you get the first attempt, break, and then you get the second leg higher here. They're clearly nearly measured. It's just a leg higher, two-legged correction, and then you get that second leg leading to the measured move, and then it plummets. And so this one is a triple test. We clearly have these highs up here. It fit with that high. It's holding another time here. And so yeah, this trade wasn't based off of this downtrend because this downtrend formed from this high swing. So this trade would look like this without this downtrend in play. But I'm going to leave it because it comes into play later. So that's what I liked about that trade. Just wanted to get out before the overnight lows in case it bounces. It clearly ended up reacting a little bit off of it. This range that was kind of forming, which I was kind of slow on these lows. I had these highs drawn, but then it kind of took me longer to draw these lows for some reason. It's like I knew they were there. I often get lazy with the drawings. If you've been watching long enough, you know I get lazy with the drawings sometimes, which isn't good. But eventually, sometimes you just don't even need to because you can just see where they are, and then you just don't even do it. But you should. It doesn't make sense to not draw them. Anyway, so where was I? Oh yeah, what I was saying was the overnight low right here kind of became the midline, which means I probably should have pushed it to 1 to 2. Because it's 1 to 2 is still within this next swing. It's still within this measured leg right here. I think I should have probably pushed it. I was worried about the overnight high, but I shouldn't have been because it was acting perfectly as a midline. So anyway, we push out, we pull back, we have a breakout pullback, which when I took this trade right here, I didn't even take it based off that. I didn't even have this line drawn. I should have had it drawn, but it's like I knew that we were basically retesting this range right here, and I just was kind of eyeballing it. Retest of the range. I'm still gonna have it because this is basically what I was thinking. I was just lazy with drawing it in real time. So we have a range here. It's retesting the range. First attempt to fade, second attempt to go back into the range, failure. It was holding below. It wasn't holding below perfectly, but when I got the entry, it was closing below. It was clearly it wasn't rejecting the EMA necessarily because it was closing above, but it was clearly rejecting this price level. It was clearly turning down as soon as it touches it. It pierced it more the first time, then the second time it was a stronger rejection. Then when it closed below the EMA like that, I really liked it because at that point it was like a big picture failed second entry. I saw it as downtrend break, first attempt lower, second attempt lower. And then at first for the sake of showing this, I'm just going to quickly delete some things. At first I was viewing it like that, which I had to go a little past the measured move. I was more thinking of it as pushing the trade down to this swing down here, but then also not going past 1 to 1 because it went past the measured move a little bit. But on a bigger, and then I missed this trade because I had just gotten out of this trade, so I wasn't really focusing as much. I tend to do that right when I get out of a trade. I'll oftentimes miss a trade that's right after, if there's a trade right after, because sometimes it's just right when you get out of a trade, you kind of lose focus for a little bit. But I believe I noticed someone else got this, though, on the website. Someone posted this next trade right here. And so then you got these bigger legs here, which clearly, once we reached that level, it did bounce. These two smaller measured moves were kind of linked up with this red measured move. They kind of led to the same area here. But yeah, this trade right here looks good. It's downtrend break. First attempt lower. We can expect a second attempt lower. We did make a double bottom already, but it is holding down right here below the EMA. It's a big picture failed second entry with the bias. So I do think that's good. I do like that a lot. I like that, and I like how it's below the EMA, because since it did make a double bottom, you would want it to hold below the EMA, because that could end up, you could hold above the EMA and then problems could arise, because there are still going to be people trying to fade this range, but clearly when it's holding below the EMA, it's with the trend, it's with the bias. Just stick with the trend. So we push lower, we reach that measured move, we bounce, but we end up plummeting. So then we get a break, we get an overshoot of this downtrend here. So we have this downtrend. It was holding pretty well off these lows here. We have an overshoot. Most overshoots lead to a break, which has not happened yet. We're clearly, as soon as we overshot, we're trying to test this level up here at least. And so, what did I do? There we go. All right. So when we overshot, we quickly went congestive. I just realized I was skipping over traps I meant to talk about. This is marked as a trap because it's just a to the tick failed second entry entering into the high of the sharp move higher. And then this one is marked as a trap because it's basically an extension of this trade. It's a bigger picture failed second entry that is continuously pushing below the EMA in a downtrend with the entry below the EMA into this line. I could see how people would get trapped there trying to go for, trying to push it a little bit into the range, but it's just if it's kind of against the bias or the trend, the entry has to be really holding. So the setup is not confluent with the context on this trade. So just thought I would talk about that. So where was I? Yeah, so it started turning into this range. Once we overshot, we have this third bounce here. The reason I have this marked is once you overshoot, you are expected to reach the other side of the range. And so when you get an entry like this, it is a second entry and it's into the EMA, but it's just you're expecting a much bigger move on a bigger picture, and then that move could easily turn into one leg. And so even though it was kind of chopping through it, I don't think that going short at the very end of a huge bearish move, you're shorting very low while you could expect a possible break of this bigger trend. It's basically like you're fighting all of the big picture structures, which is, this downtrend, which you are expected to reach the highs. When you overshoot, you're more expected to start, reaching the other side of the channel than just continuing to drop, because overshoots are like oversold basically. Like it's like that's basically a sign of oversold. It's like you don't need an oversold indicator. You can tell price is oversold when it's overshooting. So that's basically how you use that. And so you just wouldn't want to go short right there. It's just way too bearish. I mean, it's not that it's too bearish to go short. It's that it's overshooting, and you can expect it to go the other way. You can expect it to break at least. And so when you push higher here and then you get this two-legged break, I didn't like how it was closing below the EMA, but I did figure that since we overshot, we are probably expecting to reach the other side of the trend here. We have this measured move. I ended up staying with this measured move, getting out at this swing high right here, just barely above it, with still room to the measured move. And then, but yeah, it's like an uptrend break, first attempt higher, second attempt higher, only entering once it holds above the EMA here. It's just perfect context for a reversal. Overshoots lead to breaks, which of course you need a reversal to even get that break. And so when I got it on such a big picture, I loved it because it was in a perfect context for it. Yeah, so like overshoots, it's kind of like there's ways that you can take counter trend trades, but you got to be careful to counter trend trading. There's not very many reasons to do it. There's like some exceptions like overshoots, but you got to be careful because it's easy to get carried away with counter trend trading. Because technically this is a counter trend trade, but I usually don't like them. But there are some occasions like with overshoots. But anyway, so we start to go into this bigger uptrend. The highs are fitting a little better than the lows here because, well, we do have 2 bounces off the lows, and then it looks like 2 off the highs. I really consider this just 2, even though there's 3, because that bounce was very insignificant. So it kind of just did a small bounce and then retested. So anyway, so that's why I liked that. We started forming this range. I mean, this uptrend. The highs fit before you can get those lows. You can actually get the highs first. I did get this one off the lows. I was kind of drawing it like through here at first, and it fit. But of course, you can try to extend it as it gets bigger. And so then over here, you get this overshoot. It immediately leads to a break. I didn't see any good shorts in here. It's just choppy inside of this, weird area because you're chopping in between the trend line here. So it's just not the greatest area to enter short into. But then you do drop, and then you bounce before you hit the line. You push through the line. You get very congestive. No kind of trades in here, in my opinion. You push out of these range highs, and then you're basically shorting into this trend line right here, which I didn't really like because they can come back into play. Plus, it was so bullish pushing out anyway. You can't just go short when it makes a bearish bar. And then we don't get a setup. It just rushes back in, no sort of high or low, or no sort of lower high, no sort of failed second entry. Yeah, so that's really it. Yeah, I guess I just went through the whole day. Well, I guess that's the whole day. I'll see y'all next time. Have a good one.